South African Reserve Bank meets this week and an interest rate decision is due on Thursday. Many economists expect the Monetary Policy Committee to keep the interest rate unchanged. Let's find out how accurate those thoughts are. Joining us now to share her thoughts is Nicky Weimar. She's Senior Economist at Nedbank. Lindsay was mentioning earlier in Cape Town, the streets are much busier, the traffic is back again, kids are back at school. I guess there are a lot of mothers who delighted at that turn of events.
Yes, you're delighted once you've delivered them to school, but the build up to that point is quite stressful. But other than that, yes, it's a good thing they're going back.
I guess that stress is not really in the markets at the moment in the build up to the MPC this week. Everyone seems to know that there's going to be no change.
Yes, I think the consensus is certainly for rates to remain unchanged as it is at the moment. And the reasons for it is also well known by now. I mean, you've got, from the Reserve Bank's perspective, they've got to try and balance two conflicting forces. The one is an economy that's truly struggling to gain any kind of momentum. More recent indications suggest certainly that the economy has slowed in the first quarter to a very, very disappointing growth rate of only 0.9%. The second quarter might be a little bit better off that low base, but certainly nothing to scream and shout about in any measure of joy. And contrasted to that, you have this large balance of payments problem with a huge current account deficit, continual pressure on the rand, a very vulnerable currency, huge dependence on continued foreign capital inflow, which of course is reflected in a currency that's very vulnerable, and therefore there's always that inflationary threat. And consequently, the best thing is probably to do nothing, and I think that's the conclusion the markets come to.
Nicky, I think you're absolutely right, but I was just talking to Liston Mainches and we brought up the inflation issue. Now, he's an inflationist. He says that at some stage it's got to take off, but it's been a year since the rand really started to go on a trot from 8.10 up to 10 against the US dollar, and yet inflation isn't rearing its ugly head. It's still bubbling below 6, but it's still not going above 6. And I just wonder if then there's any sort of symbolic reason why there shouldn't be a 0.25% cut. On the one hand, a 0.25% cut is not going to do anything for the economy, but it does appease certain stakeholders within the South African economy, and you know who I mean.
Yes, I mean, really, if you cut interest rate now, you would probably help the consumer. You would make it easier for people to repay their debts, to service their debt. But at the same time, you might make continued demand for things like unsecured lending attractive. You might be inflating bubbles you don't want to inflate. Not that there's much bubbles in the South African economy at the moment, but you really have an economy and a structure in this economy that is unsustainable. You have your producers under tremendous pressure, and they are under pressure for reasons that have very little to do with the cost of borrowing. And then you have your consumers really carrying this economy, and they've been doing so for quite some time. But they themselves are financially quite constrained, and really it's a case of really just managing their finances to such an extent that they can maintain spending. And so really interest rates or cutting interest rates is not going to lift the major drag on the economy, which is coming from production, which is coming from exports. So I would say probably not. And at the same time, you've got inflation that is really sticky near that sort of upper limit of the target range. It hasn't run away, and the reason it hasn't run away is because demand is too subdued to accommodate cost increases. Most retailers will tell you if they want to move volume, they still have to discount. And it is that reality that really is keeping prices in check. Having said that, though, we know that if the rand weakens over time, sometimes with a delay of 3 months if it's extreme, but if it's over 6 months, we have moved to a lower trading range, to a weaker level. Slowly and surely it will start to filter through.
Tito Mboweni got the ball rolling when he was governor, talking about labour relations, and Jill Marcus now seems to be bringing that front and centre, but nothing seems to happen as a result of it. Is that just what central bank governors do? Wave flags but anticipate that nothing might actually change?
Actually, I think that Governor Marcus have been incredibly vocal on matters that central bankers in South Africa have generally sort of steered away from. And I think it's been very important, and it relates to what is holding this economy back. We are growing at a very, very slow pace. At best this year, we're probably going to do, if we're really lucky, 2.5%. That seems incredibly unlikely, though. We're probably going to grow at closer to 2%. We've been consistently losing momentum, and the reason for that is because we have this incredibly poor performance on the production side of the economy. And it relates to the following factors. It relates to the fact that we have major structural impediments to growth in this economy. Among them is, of course, insufficient economic infrastructure. That argument is well known. The fact that we have insufficient power supply capacity, we have insufficient transport and logistical capacity. Not only that, the cost of those items, which is absolutely essential for any business to operate, have escalated very sharply, especially that of electricity. If you look from 2007, you've had an increase of over 200%. At the same time, if you're going to have in one cost item this massive escalation, for a company to remain even remotely similar in competitiveness to the year before, you have to have cuts everywhere else, which we haven't had. We've had labor costs escalating well above the rate of inflation. We have other structural problems that escalate cost as a result of just simply lack of delivery in terms of simple government services. At Nedbank, we often speak to our business banking clients. These are smaller companies, and they'll tell you simple things like getting access to the internet. Getting your telephone lines up, the long delays, that all raises the cost. You're not operating fully yet, you can't meet your customers' demands, yet you're paying for your rentals, and you've got all these delayed costs that comes on. So South African businesses have experienced, especially producers, a definite loss of international competitiveness as a result of the escalation in cost. Now, electricity is a big factor behind that, transport and logistic cost is a big factor behind that, but labor is too. So I think what Governor Marcus is saying is if we want to grow faster and we want to employ more people, we can talk about interest rates all we like, but ultimately we have to address these issues for which there are no simple solutions. You have to finish the power plant.
Nicky, can I just interrupt? Sorry to do so, but you're obviously right at the top of the list of the MPC is the domestic issues, but the international issues are also very important. Tell me how it works. How much do these committee members look at what's happening in Australia, what's happening in Brazil, what's happening in the United States when it comes to interest rate policy and say we cannot get out of line?
No, they certainly look at it. I mean, if interest rates globally, especially in other emerging markets, come down, that clearly provides South Africa with some scope to cut rates. Now, the story in other emerging markets have been quite mixed, as you know. In China, really, they've tightened liquidity, also about concerns about reckless lending, concerns about the so-called shadow banking, your sort of off-balance sheet lending, which sounds frightfully familiar as we've been there back in the US in 2007, 2008. But nonetheless, that's what's been happening in China. In Brazil, they've been upping interest rates as well because of concerns over inflation. Yet Brazil's growth has also slowed dramatically. In fact, it's slowed down to a crawl. So really, in emerging markets, the tendency has been rather to increase interest rates than to cut interest rates. And then, of course, we've seen a similar situation, and this is the big one for them, of noises regarding the possible, change in the very loose monetary policies we've seen in the US and other developed economies, which of course is a key factor that will influence the value of the rand. As we are so dependent on foreign capital inflows, especially into the South African bond market. So if that sort of risk-return ratio were to change as a result of higher interest rates in the US, which is obviously perceived to have lower risk than South Africa, that could mean capital outflow, that could mean a weaker rand. So yes, they'll pay a lot of attention to what happens to interest rates elsewhere in the world. But I don't think that too much has changed. If anything, since the last MPC, you can probably make the argument that the rand is looking more vulnerable because there have been these noises, and certainly the US Federal Reserve has announced a framework for ending quantitative easing.